the discount in that market. And those just rotated out when we switched over to an ETF. If you look at the individual ETFs, they're doing quite well, right? iShares is above $1 billion. At Bitwise, we're around $300 million. $300 million in 3 months in an ETF is like one of the 50 fastest growing ETFs of all time, right? So doing just fine from that perspective. But I think a lot of money rotated out of ETH and the arbitrage play. The other factor is that it was just too soon. I mean, I said this before the ETF launched. It would have been better to launch those products in January or February of 2025. People are still getting their hands around Bitcoin and their hands around crypto and accepting crypto as an asset class. Once you have to have a complicated conversation about how Bitcoin is different from Ethereum with a financial advisor, that's like a many month conversation. It would have been better to have more time for Bitcoin to season before we got ETH. But, look, I think we'll look back in a couple of years and there'll be 10, $20 billion in Ethereum ETFs and everyone will be happy. It's just right now out of the gate, there have been net outflows.
Yeah, that's fair. Did it surprise you and your team or catch you off guard the speed in which the ETH ETFs were approved? Because I know myself, like, there's a lot of time to prepare for the Bitcoin, but want to hear from you. What's going on in the options world? Are they coming? Are you hoping they're coming? And what do you think is going to be the impact of actually getting options in the crypto space? Obviously, we have already had things like Deribit, but I do feel like it's quite significant to have it actually, in the more TradFi ETF space.
Yeah, absolutely. So first, just from a clarity perspective, the way options work is sort of like a nuclear launch thing where you need a key to turn from the SEC and from the CFTC. What we've had so far is from the SEC, and we're
Got it.
waiting for the CFTC. My ultimate expectation is that will happen, and it will happen for multiple ETFs, not just BlackRock. But I actually really like the framing that you offered when you talked about we already have Deribit. A good way to think about the impact of ETF options is to imagine the world if we didn't have Deribit and we didn't have perps. Like, what would the Bitcoin world look like if we didn't have any derivative activity on it? It would be a fraction of the size it is today. There would be a fraction of the number of applications. And maybe it would be a little bit less volatile, to be honest,
Yeah.
because people use that for speculative purposes. That's actually the right framing for what's happening in the traditional market, right? So now we have regulated futures on the CME and some regulated options activity, although it's relatively small. ETF options are traditionally very successful. Introducing, it's overwhelmed by this normalization factor.
Matt, what else are you excited about in the ETF landscape? Because we've got the Bitcoin one, we've got the ETH one, but now we're starting to see some filings for some more sophisticated types of ETFs. You've been a veteran of the ETF world for many years. I want to hear from you. What are you excited about? Is it ones where you're starting to see these index ETFs, where it's like a portion of Bitcoin, a portion of ETH, some more sophisticated, I don't know, rotational type of ETFs? What are you excited on? What's got you fired up?
Yeah, all of it. So let's start big picture. If you think about where we are today, I think people are somehow underestimating the amount of change that could take place in a year from a regulatory perspective. It's like we didn't learn the lesson of this year that you can go from not having an ETF and it being impossible to ETFs being one of the most important things in Bitcoin and one of the most important things in ETH, and something we talk about all the time. And they don't imagine that we could make that same leap again next year. But I actually think that's the case. I think next year we could be talking about a wide array of ETFs on a wide variety of assets and sort of a 10xing of the ETF ecosystem. So that's one thing that I think people are generally missing. In terms of specific strategies, there are a lot that I'm excited about. So I am really excited about index-based products. Bitwise runs the largest crypto index fund in the world, the large cap assets today that I haven't seen articulated, and Bitwise plans to articulate many of them in the coming months. So I'm optimistic on that. And then the other thing that you really want to look for is an asset with staying power and a strong community behind it. People overlook sort of the importance of community in crypto. But if you look at something like Solana, yes, it's very exciting, all the applications and the technology, but it's also very exciting that it has this strong community around it. Other examples of assets that have strong communities, some assets people love. There are many new assets, whether it's Sui or Aptos or Monad that people are very excited about. And then there's some legacy assets that like XRP that have very strong communities and are doing very interesting corporate development work. So you want to look for a thing you can launch and then something with strong community. And I think the combination of that is the right place to look for launch products.
What do you think is the biggest misconception people get around ETFs, ETF flows? Because if you go on Twitter on any given day, people will be digging deep into the daily flows data and try to extrapolate into price predictions. And okay, it's it's the causal effect of today's price action. Oh no, it's the causal effect of tomorrow's price action. There's a lot of back and forth. So what's the biggest misconception that you've seen?
Yeah, I would say there are two. There are two different sides of the spectrum. One is the obsession with daily flows is completely wrong because the way authorized participants work, the flows that you see reported in an ETF today may have come in yesterday.
Making it easier for institutions to enter Web3. Discover more about Mantra's capabilities and how you can participate at mantrachain.io. All right, back to the show. I love that the way that you piece that together. One thing I want to ask on that is what are they actually doing when they're going through that due diligence process? Is in terms of like the actual companies and their compliance departments, like are they just looking at, I don't know, correlations, flows, the value proposition? Those 500 pages of stuff that you said you filed and the like. What are they actually looking at, and what's that process? Because I always hear that, but I'm like, okay, what are they actually doing? It's been almost a year that we've had the ETFs.
Yeah. I think the first thing to remember is that they are dealing with hundreds of ETF launches every year,
Hmm.
and they're like 4 or 5 guys
Yeah.
and women that are running this, and they do quarterly meetings because they're at a bank. So they're probably looking at one thing for 3 months and then another thing for 3 months, and we're like, "What are you doing?" And they'll tell you, "We have 500 ETFs, and so you get 1/500th of our time," right? And so I think that's an important element. In terms of what they're looking at, they do really extensive due diligence on everything from custody to trading to the ETF issuer itself, to liquidity of the asset, to how the AP structuring is worked out, to how the executions are taking place when they're getting orders for Bitcoin ETFs. You're talking about massive documents of due diligence, right? Tens and
Mhm.
tens and tens of pages from all the different ETF issuers, maybe not everyone, but all the large ETF issuers, and then their wafers in a mixed state is the altcoin market because
Yeah.
there's more regulatory risk around those. And again, even if there's not hostile regulatory activity, there's this shroud of uncertainty. So if you're a large bank looking to do a tokenization project, are you going to be building it on a new blockchain if you don't have clarity on where it sits on a regulatory perspective? No,
Hmm.
right? You're going to build on Ethereum, which at least has some element of regulatory clarity. So I think that's that world. I think it's probably pretty good for
Hmm.
Bitcoin and ETH, but the altcoins may suffer.
Yeah.
And then, in a Trump world, I think the market immediately assumes that you make significant progress in opening up the market, and you'll probably see altcoins do quite well in that world. That's at least over the short term. In the long term, I think we end up in the same place. Well, in the long term, my view is that Washington has turned the page from its traditionally hostile view towards crypto to something that's at least neutral. I think you can see that in the bipartisan support for many pieces of legislation. I think you can see that in the SEC relaxing SAB 121 to let BNY Mellon custody Bitcoin. I think that shows us that we've moved from like -10 to -3. That's still pretty good progress. Like we can take -3. Um, and eventually I think we'll get to a good place. It's just
Mention what are the steps and the conditions to get to $80,000 on Bitcoin. Do you want to hash out those steps and what you're looking at for that?
Yeah. First, I'll say that I love everyone throws out price predictions, but everyone just throws them out as if they're guaranteed to happen, which is just not true, right? Like they're all conditional. So at the start of this year, Bitcoin was trading a lot lower than it is today. We said it would hit $80,000 this year, and so I wanted to update. I think that's still true, but it's true only if a certain number of things happen. And I think the key things that have to happen is we have to see not a Democratic sweep, right? We talked about this earlier. We can accept any other electoral outcome, but a Democratic sweep would raise the level of uncertainty so much that I think there's no chance we would get to $80,000. So that's a big piece of the puzzle. We need to see continued economic stimulus and rate cutting. Like, I think the market expects two more rate cuts. I think it expects more stimulus from China. Maybe it's starting to expect Europe to try to do something to revive its economy. And it will be disappointed if we don't get that. And I think if it's disappointed, that lowers the probability of getting to new all time highs. And then the third thing is we need like no whammies.